Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day all. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, and this is the 30th of May, 2018, and we're just getting close to 2 p.m. Central Daylight Time. Now, I got to tell you, yesterday the world was coming apart. All of a sudden, the stock market, in fact, in the Russell, you wouldn't even know there was a problem because you're at all-time highs. The stock market has sold off from this morning's high, not that far from it, but it's made back on the loss of nearly 400 points yesterday, practically everything, as have the other indices. So what you're dealing with is one day you're hearing that Italy's coming apart and that their debt's going to soar and it's going to hurt the whole continent of, well, actually the whole zone, the Eurozone. Today, the market's got ideas that maybe the two parties, the League and the Five-Star Party, as they're called, can get together, get a finance minister in there and a temporary warden, as I'm going to call it, if it's a prime minister, until the next election comes forth. Some think the election can be in July if they can't do this. Others think it's September, October. The point is, we're still in the issue, but it calmed down. That's very important. As for the trade and tariff wars, as I like to call them, they're not calming down. June 1st is 2 days away. I'd like to know what the president's going to do. Will even a meeting take place between Secretary of Commerce Wilbur Ross and the Chinese delegation, or will the Chinese delegations go, get out of here? Just one of those things. You know, no matter what we do, you come up with new things. From the U.S. perspective, the Chinese didn't give us anything. They're slow as usual. They're going to do things. Of course, they don't steal intellectual property. They told that to the World Trade Organization. We know better. So there's many different sides as this is playing on. Of course, then there's Japan and our two partners, left and right, north and south, Canada, and of course, Mexico. There's a lot still on the table. Metals were able to stabilize today as the dollar took a dropping down 66 points and you're up over 100 points in the euro, a full penny gain. Okay. It's a day where the markets come back after Memorial Day and it's reflecting a bit. If we take a look here at a chart of gold on a weekly closing basis, nothing has changed. The market's still in a down thrust. It's bounced off the lows, and that's about all you can say. And for the week, it is still down $2.50. When we come to a June gold daily bar chart, you can see the consolidation that is taking place. And when we take a look at the swing line study, lo and behold, it turned friendly today. You have a pattern of higher lows and higher highs until now the low of 1291.40 is taken out. The trend is defined by the swing line is turned up. And the swing line defines trends as higher highs, higher lows for an uptrend, lower highs, lower lows for a downtrend. No trend has a higher high and a lower low in some manner. You filter this with the 18-day moving average of closes. The 18-day moving average of closes in red, I call it the 18-day MAC, moving average of closes, to me acts as the line in the sand. When the market is under it, I say it has a downside bias. When it's over it, an upside bias. It filters the swing line. Even though the swing line's in an uptrend, the fact that the market's not over the 18-day average gives it a downside bias. The two counter each other. I see nothing. I next look to see where are the Bollinger Bands, these black dashed lines. Now this line up here, green one, is the 100-day moving average of closes. The 200-day is right here. The market's gotten over the 200-day before, under it before. I'm going to actually remove it on the chart for a bit. It's most important when it hasn't been hit a long time. Just rallying back up to it is not as important as, in my opinion, the 18 and the 100. Those are the other two big ones in that region. So, in order for this market to get friendly, It's still got to get over the 18-day average, and the support of the Bollinger Band, which was hit back here, well, the market's already gone back to the 18-day average, reactivating that if it drops down through 1291.40 and doesn't get through 1307.20, you have a pattern then of lower highs, lower lows under the 18-day average, activating that number. Close over 1303.20, and you put back in the uptrend and momentum, which is turning up. You're at an important point on this market. It's finished off one leg of its downside. Is it going to begin another? Or to the upside? I try to always see if I can get a clue from the ETF. Sometimes the gold ETF moves ahead of the futures. In this case, it's not. You've still got the pattern of higher lows, higher highs, bullish, but just like the futures, it's staying under the 18-day average, and it's almost identical in the momentum. So again, I'll go to the GDX, the gold miners. Used to be that the miners could lead the parade before everything got going. It's not doing it. You've got the pattern of higher lows, higher highs, went right up into the resistance of the 100-day average in the 18. What's common in all these markets? If you can get through the highs up here, the peak there, this peak, and this peak, in other words, 2 days ago, then what happens in the market is all can turn to the upside. The other part that's happened is the bears are holding the market back at those 18-day average of closes. As I said, you had a run-up in the gold-silver ratio. You originally were at 82.43. You've worked your way recently back down. One time you got back into this 78 zone, now 78.27. You got up and over the 18-day moving average of closes in red, not week, 18-day. And so you've got downside bias again. When we go to the silver market, notice how it's stuck at the 18-day average. And unlike gold, it has a pattern of a higher high and a lower low. Yes, this low made yesterday took out the key low here of 1633. I see no trend at all. In addition, momentum has gone totally sideways. What else should your eye go to? If you can, look where my hand is. This is the lower Bollinger Band, the upper. You've got total sideways action. This is exciting. Exciting because from sideways action come trends. I don't know how long it wants to churn here, but that's what you're doing. You're churning. Neither the bull that's looking for the follow-through nor the bear that's looking for follow-through is making anything. Keeps coming back and going nowhere into that center line. In the copper market, you're still in a downtrend, but what did you successfully do? And the word is successfully. This was the lower Bollinger Band. You went down to it yesterday. Today you tried it again, couldn't do anything, came back up, and you're going to close slightly higher. The bears have control of the market. Why? Lower highs, lower lows. Resistance, 308.25, the 18-day average. You'd have to take out the high right back here at 311.70 to negate that chart pattern, and there's no way it could turn it bullish. Why? Because you still have the lower and low. If you went right up through it, you'd have a lower and low and a higher high. So a lot of resistance up here, support down here, sideways action again. Again, I'm going to repeat it. From sideways action come trends. Do you believe in sideways action in the platinum? Look at how it's just churning right against that number. Now, the close in platinum was bullish. You have a market that's got higher lows, higher highs, and closed over the 18-day average. Momentum is still pointing up. So until 898.70 is taken out, the odds favor more of an up move in this market. And in the palladium, it managed to save itself on the close and do the same. You've got higher lows, higher highs, or do you? Nah. I still look at it now as lower highs, higher lows. So the lows are coming down like, the highs are coming down like that, and the lows are moving up. This changes the pattern a little bit. So the bullishness that one had in this market has now been put to the side. Certainly take out the highs of Tuesday, and these were 983.40, and the game comes alive, and you put right into the target, the upper Bollinger Band and the 100-day average between 993.40 and 996.30. Got it? That's how I'm going to be viewing that market. Can anything here turn the market bearish? Another part you have to always look at. Well, if I've got lower highs and I took out 958.40, it certainly would, and then you're targeting the lower Bollinger Band. So have the what ifs. You know, when I teach in my charting course these charting patterns, I promise they become second nature to you like that. In the dollar index has higher lows, higher highs, bullish. Now, what am I watching? I mentioned this to you yesterday. I'm going to say it again. If this market loses the embedded reading, the odds favor that price and the 18-day average will make a run for each other. The market right now is at 94.11.5, and the reading is 80.56. If this market slips back into the 94.07.8 zone, it probably loses that. In addition, you got to be careful tonight. Why? When a market closes near the end, the low part of a day's range, and you're on the cusp of possibly losing that Bollinger Band reading, when it reopens, it often loses it. It's how the math of the formula goes. So I want to see this market act better than it is. This could be a bit of a warning sign for the bulls right now that there could be some problems brewing right here. Be careful and be certain to take a look at this market by the close today. Remember, you get a settlement price that is before things finish up. So you always get a look-see in the market. And I put that all together, try to come up with game plans and see what it can do. Now, there's a lot of traders that contra-trend trade. And when they do, there's a popular tool called pivot points. Now, what pivot points do, it's a math formula. And your charting software probably does it. You might not know how to use it. But it's going to look at the previous day's open, high, low, close. It can use the open or it can just use the high, low, close. Different ways to compute it. The popular way is you're looking at the high, low, close. You're going to come up with a center number. You're going to take those three numbers, add them together, and you're going to get this white line. From there, using the formula, you're going to get first resistance, second resistance, first support, and there will be a second support in the marketplace. As it all comes together, what you're looking for are ways that you can be selling into the resistance levels, trying to buy back at the support, buy at the support, trying to sell back at the resistance. And yes, friends, you can tie momentum studies into it. So when you tie it all together, you're trying to come up with a game plan. Admittedly, it is, when you're just starting out raw, one way that you can say to yourself, well, hold on, what is this all about? It's contra-trend trading, to a degree. What if you're long the market and you're looking for a resistance point and you're not able to see it on the chart somewhere else? Another way to look at resistance points. So it's another popular tool. We've put together videos and a whole explanation as how to work this. And yes, it works in all of our different charting software platforms. If you'd like to try it out, learn about it, we even have a broker here that devotes most of his day to it. You can give us a call. You can go to our website. You'll see pivot points. Sign up for that on our carousel of free offers. You can click up here, or underneath us on many websites it says click here for Ira's free information. I'm Ira Epstein. Thanks for watching, and I'll see you in the financial markets.